All right. Good morning, everybody. Good afternoon, depending on where you're tuning in from. And welcome to this week's mobile coaching stream. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully, everyone is doing well. We should be live both on Facebook and on YouTube. So welcome, everybody. Giving everybody a second to get in here. Hopefully, everybody's having a good day so far and been following the VectorVest guidance. So that way, keeping you protected with what's currently going on in the market. Hey there, Todd. Hopefully you're doing well this morning. Good morning. Welcome. All right, so let me just make sure Facebook, Facebook is all set. So we should be good on that. Let me do this. There we go. Make it easier so I can see everybody on our Facebook side as well. Perfect. Hello from Montreal. Hopefully you're doing well. If you guys can hear me out there, type in VV Nation into the chat. Let's get those going. Seeing everybody, see who's in so far. The notifications should be going out, so we should be seeing some more people coming in any moment now. And if you're just getting in here, make sure before anything else, you smash that like button because that helps us out with the YouTube algorithms. Doesn't cost you a thing and allows more people to find out about the VectorVest Stock Advisory app, so that way they can help take control of their personal finances and help get themselves on the right track to financial success. So there we go. Juan coming in with the VV Nation over on Facebook. Good morning, Juan. Hopefully you're doing well. There's Drew, VV Nation. Glad to see it. Hopefully you're doing well there, Drew. All right. So once again, welcome everybody. This is our weekly mobile coaching stream that we do where we cover the VectorVest Stock Advisory app. If you're not familiar with it, it's by far the most comprehensive trading app out there that allows you to not only know when to get into the market and when not to get into the market, but also what stocks to be getting into at any given time. So that way, it's your one-stop shop for managing your portfolio. There, Jim, VV Nation. Hopefully you're doing well, Jim. Glad to see you here this morning. Maria, hola. All right, so as always, what we typically do here in these streams is we first take a look at what's going on in the markets, and then we'll dive into our topic of discussion. And then as always, we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So if you want to see your own stocks being analyzed, see how they rank or how they compare in the VectorVest system, make sure to stick around towards the very end so that way we can analyze those there for you. D, haven't had a Red Bull in a couple of weeks now. So no Red Bull to show you, unfortunately. Sure, I'm jumping the gun, but I'm selling my contras today. We'll see how that goes. I mean, it was looking like the market was getting ready to rebound a little bit, but we haven't really seen it come back yet. So looks like that may have just been a little bit of a head fake for right now. Yep. So with that, let's go ahead. Jump right into the VectorVest Stock Advisory app. Take a look at what's going on. So right now, the Dow is down about 0.9%. The Nasdaq's down almost 2%. S&P 500 down 1.25%. VectorVest Composite down 1.7%. So therefore, our market timing gauge is 3 ticks into the red. So the color guard is bearish and VectorVest does not advocate buying any stocks at this time. Not Monster Todd. As always, as a VectorVest subscriber, you always get access to the daily color guard report, which analyzes what's going on in the market right now, what to expect for tomorrow, what headlines you need to be prepared for, and how to really get your portfolio prepared for the next trading day. In essence, this will make sure that you never get caught off guard with what's going on in the market and keeps you on the right side of things. So as we scroll down, getting out of that, scrolling down a little bit, taking a look at the color guard, as we can see, a lot of red lights appearing as of late, no surprise there. And if we notice, whenever we see those red lights, it tells us these indicators are moving down day over day and week over week. So the price that we look at is the price of the VectorVest Composite, which is the arithmetic indexed average of about 9,200 stocks out there. This gives you a better representation on what's actually going on because it's not just looking at the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at 9,200 stocks out there. The next indicator is the RT or relative timing, which is looking at the short-term price trend of the stocks. So cast on a scale of 0 to 2, above 1 would indicate the short-term trend of the market is up, below 1 indicates that the short-term trend of the market is down. So at 0.86, that tells us clearly the short-term trend of the market is down and picking up strength to the downside as well. And then the third indicator is the BSR or buy to sell ratio, which is looking at the number of buy rated stocks in a database and comparing it to the number of sell rated stocks in a database. This gives us a great idea on the overall market health. So if it's below 1, like it is now at 0.25, that indicates overall market weakness. And then the trends of these three indicators are comprised to come up with our MTI or our market timing indicator. It's cast on a scale of 0 to 2 once again, and it's looking at the underlying trend of the market. So if it was above 1, the underlying trend of the market would be up, and below 1, the underlying trend of the market would be down. So as we can see at 0.69, the underlying trend of the market is clearly down here. What about buying inverse ETFs, or will Tuesday stop it out? I mean, inverse ETFs are a great idea. We've talked about that plenty of times here, Eric. But today we're going to be taking a little bit of a different approach into playing the market to the downside. Miller like, I'm good on all that, Joey. I think that's Joey in the background. Yeah, not a coffee drinker either, so I'm going to keep you guys guessing. Some of you guys should know this already. All right, so as always, after the MTI, we then look at the trend column, which shows two parts of the trend each and every day. The first part refers to what we like to call the primary wave, which is just simply the weekly trend of the market. As we can see, it is down since the price of the VectorVest composite is lower than what it was compared to 5 trading days earlier. The second part of the trend is looking at the underlying trend, or the MTI, and since the MTI is below 1, the underlying trend of the market is also down as well. After that, the next column is our calls column, which stands for our confirmed calls, and it's our most conservative timing system here at VectorVest. It's our last signal we get to get into the market and our last signal we get to get out. And as you can see, we still remain in that confirmed down situation we got back on the 26th. So that's going to review what's going on in the market. So let's scroll down, taking a look at the advanced declines. We always like to finish off with this. Right now, only 11% of stocks are moving higher and 77% of stocks are moving lower. And when we look at the advanced declines, we typically want to see a 2-to-1 bias with it, and we clearly have that. So if we're going to be playing the market to the downside, or if we're going to be playing the market, our bias is telling us we should clearly be playing the market to the downside here. All right, so with that, let's go ahead, jump right into our topic of discussion. You know, a few weeks ago when the market was getting ready, or when the market was just starting to rally, we were talking about new buy rated stocks to play to the market to the upside. Well, since we just got that confirmed down once again, now it's time to look at potential short candidates to trade to take advantage of the market to the downside here. So what we're going to do is we're going to go into the screener section and take a look at some potential trading candidates that could be very useful in the current market environment. Now, we'll click on the screeners here on the left, go to the featured screens, and then scroll down a little bit. And towards the bottom, second to last one, we have new sell rated stocks. So if you're not familiar with the VectorVest system, we give a buy, hold, and sell rating on every single stock every single day, and they're based upon strict rules. So the only rule that it takes, though, to get a sell recommended or sell rating on a stock is the price falls below its stop price. Now, its stop price is based upon a 13-week moving average adjusted for the company's fundamentals. So it's our last line of defense. If you're holding a stock long, that's our last signal we give you to get out of the stock. So therefore, stocks just hitting that sell rating, especially in a market sell-off like we're experiencing, is just getting started to the downside, therefore giving you a lot of potential to take advantage of these here. So if we go ahead, tap on it, it'll automatically bring up the best candidates at the current time that we run it. And waiting for, there we go. So if you notice, a lot of big names coming in here, a lot of sell ratings on the left-hand side, starting off with the very first one, AMD. So everybody got extremely excited about all the bullish, or all the political things that were boosting semiconductors and boosting chips. But now the government's saying, hey, you can't be selling certain chips and certain products to certain countries. So therefore, they're getting hit pretty hard right now, because that could definitely hurt or impact their earnings, because if they can't sell a product to their potential customers, well, they're going to have to eat that cost, and therefore not going to make the earnings that the street was expecting them to make. So looking at AMD, first and foremost, when we pull it up, we take a look at the analysis at the bottom. Well, these 4 indicators are all cast on scales of 0 to 2, and above 1 is good and below 1 is bad. AMD has good long-term potential, has less risk than the average stock out there, but it's in a really strong decline currently. So overall, the stock is a good stock, but right now is not the time to be holding it. So therefore, right now is a good time to be playing it to the downside here. So when looking at this, remember, even the best stocks go down in a down market. Well, what are we in right now? We're in a down market. We're in a potential bear market currently. And right now there's no sight, or at least no end in sight to when that bear market would start to ease off. So therefore, we have some good opportunities to take advantage of, these types of stocks that are potentially overvalued, that have a lot of potential to go down as the market continues to go down as well. So therefore this one, it's undervalued currently. So therefore, if you're looking for these, you may want to try to favor overvalued stocks, but regardless, these are still going to be some good shorting candidates, especially when you see that RT of 0.65. When we take a look at the chart, we can see overall steadily hitting lower highs, lower lows, heading back down to a new low as we speak. And that pattern still remains intact. So therefore, until we see some change in the overall economic environment, there's still a lot more downside to potentially experience here. Let's see. What do you think about NVIDIA shorter buys? So Bill, just stick around towards the end and we'll make sure we get that. Also, we've got 10 times the amount of people here right now with us than we have likes. So if you haven't smashed that like button, do so right now. It doesn't cost you a thing and it helps us out with the YouTube algorithms. So what are you waiting for? Go ahead and do that. That way it gets us out there so people can find out, more people can find out about the VectorVest Stock Advisory app. Because in this current market environment, now is more important than ever to have this power at your fingertips. So looking at AMD, can see steady downtrend, continuing to decline. So overall, yeah, definitely see some potential to take advantage of it. Now, if you want to change your graphs up, we talked about this quite a lot recently. If you want to change your graphs up, we can go to the graph settings. Let's say we wanted to add the moving averages back to the graph. We'll add our standard, actually 3 and 8. Go back there. Change it from RT, let's say, to MACD. Going back. Maximizing it here for everybody to see. So looking at it from a technical standpoint, the 3 and the 8 are negative. They've been negative for a few weeks now. Looking at the MACD, MACD went into positive territory, indicating a potential long-term uptrend, but then the MACD line crossed below the signal line just at the beginning of August. And since that point, it's been heading lower, and now the MACD and signal line are both below that level of 0, indicating a longer-term downtrend now starting to occur with AMD. So if we get out of here, go take a look at the next one. AMAT, similar situation. We saw a continuation of lower highs, lower lows. MACD just getting into negative territory on a longer term basis. Short-term entry would have been a couple of weeks ago, right after the beginning of August. But if you've missed the party on that point, you now have a new opportunity from a longer-term perspective right here. We noticed the last time MACD crossed into negative territory on a longer-term basis was right about here. And we can see the stock was trading at 130 roughly. Now it's trading at 90. So we can see a lot of potential downside still just based off of that. Moving on to the next, SIMO. Another one. You've been steadily moving lower for quite some time. Brief moment where it hit sell, bounced around from a hold to a sell, back to a hold, but then hitting that sell rating once again. And you have a lot of potential downside before you get down to the lower end, down here around that 65 range of potential support. Once we get to that point, then we may want to tighten up our stops, but still, at this current stage, it's 72. That's a $7 move on a $7 or $70 stock. At least a 10% potential gain right there. KB Homes. Interest rates are going up, folks. If you didn't know this already, interest rates are going to continue to go up for the foreseeable future. Fed kind of confirmed that and said there's going to be a lot of pain for individual investors or individuals just that live here. So homes have already been showing weakness. Inventories are starting to skyrocket. You're having a lot of trouble with a lot of these home builders. So we've talked about it before. DRV, we've taken positions in from time to time. This could be another great opportunity here. If you're looking for the ETF, DRV is a triple leverage ETF on the housing, I believe. So as housing goes down 1%, it goes up 3%. Maybe double, but I'm pretty sure it's triple if somebody wants to confirm that. But if you're looking for individual stocks because, with the ETFs, that's great. You're taking the average, but with individual stocks, you can have a lot more potential downside or a lot more potential gain opportunity there, because you're not just playing the average. You're looking for, the best performers or in this case, the worst performers to take advantage of in the down markets. Getting back into it, going back here, looking at the analysis. Good long-term potential. Stock has less risk associated with it, but the timing is just finally falling below 1. And once again, even the best stocks go down in a down market. That's why we talk about market timing having such an important play in where we or how we get into the market or when we get into the markets there. Good morning, Keith. Hopefully you're doing well. Looking at it though, the stock is undervalued. So let's see if we can find one. DIOD, another stock that's undervalued. Here you go. What is this? MPWR. Value is 257. Right now it's at 410. Good long-term potential, less risk. So it's a fundamentally sound stock, but it is in a steady decline. And that's what we're looking for. In this market, we're looking for stocks that are declining. And MPWR just now potentially getting ready to turn into a long-term downtrend based off of that MACD at the bottom there. DRV is 300% inverse. Yep. So that's what I was thinking. So yeah, DRV could be a great opportunity to consider if you're looking for the ETF play rather than looking for, the individual stock plays. Now, one thing with ETFs or when you're shorting stocks, one thing to consider is, one, do you have a margin account? Because you have to have a margin account to be able to short stocks. And two, does your brokerage have a big inventory of stocks on hand? If they don't have a big inventory of stocks on hand, then sometimes you're going to have issues trying to find those stocks to be able to sell them short. But with these bigger names, you shouldn't have those issues with most brokerages out there. Now, there is that common misconception that shorting stocks does come with potentially unlimited risk because, a stock can go up forever. But at this point, one thing to keep in mind with you're considering shorting is as long as you have good money management rules like we've talked about here over the last few months, it shouldn't be any different than playing a stock long. If you're holding a stock long and the stock drops significantly after bad earnings, you didn't close it, your stops didn't get met because it traded after hours and your stops didn't kick in until the market actually opens, be the same as if the stock gapped up. So, when looking at shorting, don't look at it as, all the ways or all the little mechanics of how it actually works. Look at it as just the inverse of buying a stock long. These aren't going to be shorts that you hold for, the long term or the next few years even like you would with long positions. But for short term, they can give you some quick gains and help keep your portfolio afloat and help building that cash reserve. So when the bottom actually kicks in, you have extra cash to put in to be able to get that compounded rate of return like we've talked about in the past. Is it time to dump Apple? I don't know. Stick around. Put it in the chat when I ask, and we can take a look at it. Getting out of here. Looking at the next one. ONTO. Stock, good long-term potential, less risk, but timing, once again, timing is the issue. It is undervalued, so, consider that one. But really, looking for stocks, we're going through and trying to find the stocks that are overvalued because those are going to have some of that added pressure that pushes them down even quicker. We saw it with a lot of tech stocks and that last sell-off. Now we're looking to see what's moving right now. So going through ENTG, CCS, this one little riskier. So with that lower RS rating, that does give you more potential because that makes it an aggressive stock. So therefore, when it moves down, it's going to move down a little bit faster than the average stock out there. So if you're a momentum trader, this could definitely be an interesting one to look at as well. CRUS, another one, good long-term potential, little bit less risk than the average stock, but in a really strong decline currently. It is undervalued, so a lot of these stocks are undervalued, but there's still some great opportunities in them to make some money here. So I would, and the MACD went negative, exactly. Yeah, so MACD is a great indicator to use For anybody who hasn't watched the videos, I highly recommend you head over to our YouTube channel after today's stream and check out those videos that we did or that we're working on currently. It's a series that I'm putting together of different technical indicators, how to use them, how to get the most out of them to keep your portfolio protected, and also to make money in the markets utilizing those indicators. New sell rated stocks sorted by top VST. Let's go ahead and take a look. You can always find the rules over here in design. So yeah, VST descending, looking for average volume greater than 100,000, no contra ETFs, no exchange traded funds, price greater than $5. The reason why it has that price greater than $5 is because most brokerages out there, tend to not keep stocks on inventory with a price tag of $5 or less. Typically, I prefer $10, but if you look at the stocks that are coming in here, none of them are even close to that $10 price mark. So all of these should be easily borrowable from your brokerages out there. Shows a sell as well. So MPI. So with that, if you guys have any questions about any of these stocks, feel free to let me know. But if you look at them, Halliburton, what other ones were we looking at a second ago? UMC is in here, QCOM, RH, Apps, CRM, Salesforce, Potash, Marvel Tech, NX. So you're seeing a lot of big names coming in here. Now, HPK is on the border, it looks like, of that sell rating, so that's what we're looking for there. What is the search you're looking at? So in the screeners, under the featured screens section, scroll down to the bottom, and you have new sell rated stocks. Now, the great thing about these screeners is that every time I get out of it and come back to it, it automatically reruns that screen for us. So that way, every time you look at it, the list may change it a little bit, but it's constantly updating. So that way you get the best candidates at the time that you're looking at it. So when we got that first confirmed down just on the 26th, a few days ago, you could pull up the software, go ahead, click on it. And that way you're finding not only, hey, the market's in a confirmed down, we're potentially heading for a longer term decline, but these are the best stocks that are just hitting that sell rating. So it's matching up with the overall timing as well. But even at this stage, you can still find some great opportunities. And once again, another benefit to it is, let's say you got into a position when we first got that confirmed down, markets have been tanking, you met your gain that you're happy with taking, took it off the table, now you're looking for a new position to get in, go back into the app, quickly run the scan, and find the new candidates at this time that are the best possible ideas here for you. All right, so with that, techs are hurting me, especially PLAB. So yeah, I actually took a short position in PLAB on Tuesday in the Jockey Club. So I don't know where it's at now. I closed it out at the end of the day, but yeah, we definitely took a short position on PLAB in the Jockey Club the other day. All right, so with that, if you guys have any questions on anything that you see here in the new sell rated stocks, or if you have any questions on what it's covering or how to find it, feel free to let me know in the chat or in the comments. I'd be glad to do that. So on that note, if you guys have stocks that you want to see analyzed now, put them into the chat, put them into the comments. Let me see what stocks you guys want to see analyzed, and I'll show you how easy it is to analyze those stocks in less than 10 seconds utilizing the Stock Advisory app. So while we're waiting on that, just going to go ahead, get a quick drink of water. There we go. All right, so police is coming in, talking about Uber, UBER. UBER stock is a speculative stock with poor long-term potential, a lot of risk associated with it. You are in a slight uptrend in a down market, so that's the positive note on it. But overall, the stock is not favorable. Taking a look at the chart of the stock, go ahead and maximize it. We can see it gapped up. Now, this is one. If you see a stock that gaps up, you put your line in the sand. Let's go ahead, zoom in, 3 months. Right at the low of that gap up day. So the low is at 27.10. If you're getting into it now, disregarding the market timing, going against the overall market, at least have a line in the sand at that 27.10 level. Because if it breaks down below that point, then the probability is in the favor of it filling that gap all the way down here to about 24 and some change. and you don't want to sit through another $3 gap or move down while it's while the market's moving down as well. Doug's asking, can't short buy puts? So yeah, if you are familiar with options, take advantage of them. The thing is, this isn't looking, when shorting a stock, you don't have to take into account the open interest and the volume on those the option chains. Also volatility and the delta or the Greeks and all that. So if you're comfortable with shorting stock, or if you're can't short stocks but you're comfortable with options, go through that list. You could find some great option candidates there, especially on some of those bigger names. So yeah, you could definitely take advantage of it. Just apply your options knowledge to that list there though. Let's see. Hopefully that helps you out with that one. MPI showing as well. Oh, so we can take a look at MPI in a second. All right, so let's go ahead and do that. So we'll get out of here. But yeah, Uber, be careful. Overall, still has lower highs and lower lows pattern going on right now. NPI. Oh, that's not it. NPI. Not seeing NPI there, Todd. Tesla. TSLA. So Tesla, good long-term potential. Less risk associated with it, so strong fundamentals, but the timing, 0.98. Now starting to see a downtrend occurring once again. So you had a little bit of a relief rally. We'll zoom out, go to a 1 year. So a lot of the market saw a relief rally coming in over the last few weeks, or over the last month or two, but now that relief rally seems to be coming to an end, and we're starting to see the market starting to head back down once again. So with Tesla, you had a double top here. You had the split. Since that point, been steadily moving lower. The MACD's now going into negative territory. So if you haven't started tightening up your stops or haven't started protecting your profits, this one would be an interesting one to look at. Other one to consider if you're not available to short, or you can't short, TSLQ is a contra ETF on Tesla. So as Tesla goes down, it goes up. Another opportunity to look at there. Let's see, SOX, SOXS. So SOX, since it's an ETF, the RV and RS are always going to be pegged at 1. Therefore, with an ETF, all you have to focus on is the RT. If it's above 1, as it is now, the ETF is favorable. Below 1, the ETF would be unfavorable. So overall, this ETF is currently favorable. MPLN. MPLN, good long-term potential, but a lot of risk associated with it. You're in a steady decline. Overall, the stock is not favorable currently. Google. There we go. Good long-term potential, less risk associated with it. No surprise, the tech stocks have had some of the best fundamentals over the last few years, being able to, really thrive in that zero rate environment. But now, we're now seeing that timing, or we're now seeing those cooling off a lot here. So timing at 0.8 tells us it's in a steady decline. So even though it's a good stock, right now is not the time to be long in it. Oh, the NPI oh, okay. Got you now. Let's see. What else do we have? Todd, I have asked about it. I have not gotten any responses, but I agree. I'm all in for you. I'm keeping my ears open for that. Let's see. HIBS. Once again, another ETF. Timing at 0.84 tells us it is in a steady decline. So therefore, right now, not the time to be entering into it, or not the time to be holding it, but maybe keep an eye on it in the near future. BELFB. There we go. So this one, good long-term potential, but does have more risk associated with it. It's been in a really strong uptrend recently, so therefore, it's a momentum play. It's an aggressive stock. It's favorable right now, but be careful, especially with the current rate environment or current market environments. It's going against the trend right now, but if the markets continue to move lower, it's not going to be sustainable for long periods of time. So, take advantage of it to the upside while you can, but be careful that it doesn't start correcting itself and coming back with the overall market in the near future. Let's see what else we had. HHS. Good long-term potential, but does have a lot of risk associated with it. So it's an aggressive stock. It is in a steady uptrend or a slight uptrend currently, pulling back off of the highs, getting caught up in the overall market. Overall, the stock is favorable, but once again, with the markets moving lower, all boats rise with the tide, all boats fall with the tide. So while it has been able to go against the overall market over the last couple of weeks, it looks like it's starting to lose some of that momentum. So just be careful with that. Let's see. PLAB. Let's go see where that is today. PLAB. Good long-term potential. Less risk associated with it. But the timing at 0.39 tells us it's falling like a rock. We got into it a little bit above 17 or so and some change. Stock continues to move lower here. So this is one, once again, we traded in the Jockey Club. We took it as a short trade on Tuesday. Got in the morning, got out in the afternoon. Made about 3.5%, 4% so far. If we held on to it, we would have made more. But at the same time, hey, a profit is a profit. Can't go broke taking profits there. But looking at it though, been and missed earnings, steadily falling, and now getting hit with the overall market news as well. BEN. Okay long-term potential, but it does have a lot of risk associated with it. Timing is basically flat. Overall, the stock is not favorable. Taking a look at the chart, you can see it did have a little bit of relief rally coming in over the course of the last couple of months. But once the overall market started rolling over, so did BEN. Now the 3 and the 8 turned negative and the MACD turned negative. And now the MACD is getting ready to enter into a longer term downtrend. Hey, Justin, tuning in from Minnesota. Hopefully you're doing well here today. How about MDT? Let's go take a look at it. MDT, average long-term potential, a little bit better than average risk associated with it, but you're in a steady decline. So overall, the stock is not favorable right now. UVXY, I like this play. UVXY, as an ETF, your primary focus is RT. At 0.5, it is in a really strong decline. But this is going to be a bottom fishing play. No surprise at all. If you go take a look at it, I took a position, when was it? In the Jockey Club just a few weeks ago. Got in around 1020. Got stopped out in that pullback when it filled the gap. But then back up above that level. You're now starting to see higher lows being formed after that pullback. And now higher highs being formed. Also, looking at the MACD is starting to go positive or turn bullish now as well. So you're seeing a new uptrend forming. Over the course of 2022 with the VIX, we've seen, historically, the VIX has been, a level of 20 has been a really overbought indication. Well, this year, the new level of overbought is around 30. So we still have more upside with volatility, it looks like, for this current cycle that we're in. So UVXY could still be a very, very interesting play to keep an eye on here. Let's see. LCID. Poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, the stock is not favorable. Now, with this steadily moving lower once again, had a little bit of relief, but with it starting to go down again, going to be interesting to see the impact it has on Ford and Amazon's earnings plays again. Let's see. ON, good long-term potential, less risk associated with it. Even with the pullback right now, it is in a steady uptrend, but if we take a look, overall, it's a good stock. But we're noticing from a technical standpoint, the trend is starting to change. We're starting to see the 3 and the 8 turn negative. Zooming in here, 3 and the 8 turn negative. MACD is starting to turn negative and now starting to move lower as well. Kurt, we've done a lot of sessions on contra ETFs. That's why I didn't do it today, is because we've done a lot of sessions on contra ETFs over the last few months, or just ETFs in general. So yeah, we may revisit that, but we've talked about it so much. I wanted to give a different idea for everybody out there, so that way it meets everybody has an opportunity. Everybody has some new avenue to take advantage of this sell-off in the market. Walmart, WMT. WMT, poor long-term potential, about average risk associated with it. You are in a steady uptrend. Overall, the stock's about average at best. A lot of these stocks, Dollar Generals, Riley's or O'Reilly's, these, car stores, car part stores, they were extremely successful throughout the 07-08 recession. Could be time to start looking at some of these opportunities as well. WPF, those are going to be about or YPF, excuse me. Those defensive plays are about the only thing that really makes sense. If you're going to be buying something, you have to buy something long and you don't want to get into ETFs. That really is about the only thing that makes sense at this current time. YPF, good long-term potential, but does have a lot of risk associated with it. You've been in a really strong short-term uptrend. Overall, the stock is favorable, but as an aggressive play, keep an eye on it. Be careful, especially, what's going on in the overall market here. Got a couple more here. So Citigroup, good long-term potential, but does have a little bit more risk than the average stock out there. You are in a steady decline. Overall, the stock is not favorable. Good looking potential short candidate here. ZIM, really good long-term potential, but a lot of risk associated with it. As a dividend stock, you see an aggressive play like this, really not the right mix in my personal opinion. I know a lot of people like it, but just not my kind of play. Stock is in a really strong decline as well. You can see clear pattern over the last 6 months. Lower highs, lower lows. By the basic definition, putting it in a downtrend. Now, on a positive note, you do see a potential bullish divergence starting to form. MACD is starting to move higher as price has been moving lower. But once again, whenever you see divergences like that, you don't try to front run them. You have to see some type of confirmation that that divergence is actually starting to take place before you would ever enter into the trade. CROX. And if you guys have found today's stream useful, if you guys have learned something new or something new to help add to your portfolio or new tools to add to your portfolio, and you haven't hit that like button already, make sure to do so already. That way it helps us out with the YouTube algorithms and gets the Stock Advisory app into the hands of people that are probably struggling in the market, because there's a lot of people out there that don't even know that these types of tools to help keep their portfolio on track even exist. So if you could hit that like button if you haven't already, that would help us out and possibly help individual retail investors out there that need the help as well. So looking at Crocs, good long-term potential, does have about average risk associated with it. You have been in a steady uptrend, but that uptrend seems to be dissipating. Overall, it's a good stock. So at this time, if you have it in your portfolio with it starting to roll over, I'd definitely be tightening up my stops, especially if you have some decent gains in it. But wouldn't be adding anything at this time to our portfolios, at least from that standpoint. UVIX, not finding that one here, Eric. But we did take a look at UVXY just a moment ago. All right, so let's see. Any other ones that I missed? Just going through. I saw a lot of stocks coming in, so I want to make sure I get every stock covered here for you guys out there. But, if you guys are watching the replay and you are a current subscriber, just pull up the Stock Advisory app, tap on the little magnifying glass in the upper right-hand corner, and you can do the same analysis we're doing right now on your own, wherever you're at on the go. And if you're not a subscriber, click on the link down in the description of today's video, sign up for the 2-week free trial, and put it to the test. Seeing is believing. So, I'm a big fan. I'm a big believer in that. So once you put it to the test, you'll see how powerful the VectorVest Stock Advisory app can really be for you. All right, we'll do one more here today. So TECS, TECS. So TECS, being an ETF, the RV and RS are always going to be pegged at 1. Therefore, we look at the RT at 1.06. It is in a slight uptrend. This is a contra ETF, 3 times leverage. So if you're looking at tech stocks or wanting to take advantage of the tech sell-off, this could be an interesting play to add to your portfolio. Do you offer annual subscription on the mobile platform? Not that I recall, Richard. I've asked about that. But unfortunately, with some of the ways, there's subscriptions on these platforms like App Store. The App Stores have their subscription services. It's something with that makes it a little difficult to be able to do the annual rather than just the monthly there. So yeah, I don't have much more information to go off of than that though. All right, we'll do one more for you guys. OKTA. It's a speculative play. It has poor long-term potential. It has a lot of risk associated with it. You're in a really strong decline. Overall, the stock is not favorable. And Suri coming in as a new subscriber. Welcome to the VV Nation, Suri. Everybody, welcome Suri to the VV Nation here. So yeah, looking at it, down 32% here today, $61. Most likely you still should be able to find shares available with your broker if you're looking to short it. Stock is still even down 30% here today, still double the price or double the value of the stock at this time. So still a lot more downside risk to be had here with this one. All right, so let's go ahead, jump back into the overview, take a look. The Dow now down only 0.4%. NASDAQ continuing to worsen, down 2%, over 2% now. S&P 500 down a full percentage point. VectorVest Composite pretty much flat from where we last looked at it, down 1.6% so far. Therefore, we still have the 3 red lights across the board, and VectorVest does not advocate buying any stocks at this time. Scrolling down, taking a look at the advanced declines. The advances have picked up a little bit, up only 2% since we first started. It's at 13.5% stocks moving higher, but still 76% of stocks moving lower. So therefore, even with this slight uptick that we've had, we still don't have enough bias here with the advanced declines to make us consider purchasing, a stock long here today. Not ETFs, but stocks specifically here today. So therefore, keep an eye on the market timing. If you're worried about what's going on and want to help reduce that stress level, once again, watch the daily market update. It's something we do for you every single night, Monday through Friday, where we recap what's going on in the market today, what to expect for tomorrow, any major trends or news that we need to be aware of, we'll point them out for you. In essence, we'll make sure that you never get caught off guard with what's going on in the market. As an instructor here at VectorVest for over 11 years now, I can honestly say that's one of the number one things I get from subscribers or customers that I've worked with over the years is, that one trick of watching that nightly video is one of the easiest and best things you can do to increase your performance in the market and keep on the right side of things. So on that note, it's been my pleasure being with you guys. Thank you all for tuning in here today. Don't forget, we do have Glenn Tompkins coming in at 2 p.m. Eastern for Trending Thursday. So if you want to see what stocks are hot, what headlines are making the news and driving the markets, hang out with Glenn at 2 p.m. Eastern, both on Facebook and on YouTube, and he'll break it all down for you. So have a great weekend. Have a great long weekend. Be safe out there. And until next time, take care. Adios and toodles.